Hi there, welcome to Kneppy Invest, and welcome to another answer and reply video where I get to answer your questions and reply to your comments to the best of my ability. You might be wondering why I have a map of Brisbane up, and the whole reason I have a map of Brisbane is because I do have a bit of a story for you. Now, my original intentions were to have a shortened edition today, and the reason I was intending to have a shortened edition is because the time is now 10:36 a.m. I tend to like to record these a little bit earlier than now, and the reason I'm a little bit late is because I went for a long run this morning. I had planned to do a 24K run. I mapped out a route, a really nice route. I parked right near Lang Park or Suncorp Stadium. In fact, I park here. If I have to work in the city, I park here because it's free. They have no limit parking. So that's just north of the stadium called Charlotte Street, this sort of area. I think most of Paddington is no limit unless there is some sort of event on at Suncorp Stadium. So you have to make sure there's no event. And going from parking there to my office where I occasionally might work is like 1.5 kilometers. Anyway, so I parked there and my plan was to run along the Brisbane River from, say, near Milton all the way to New Farm. Beautiful, beautiful route that is. Where's New Farm here? Actually, not all the way to New Farm, all the way to Breakfast Creek, which is just north of Tenerife or Newstead. So this is Breakfast Creek right here, and then go inland from there. Wasn't Yeah, it's sort of I can't remember exactly where the path was, but down into Victoria Park back towards the car. So that was about 24 kilometers all up. So my plan was going to fruition. Everything was working fine. A lot of people out running, as you probably would assume on a Saturday morning. I got to Botanical Park, or the City Botanic Gardens, and that's when I realized the new bridge from Kangaroo Point, which is this little bit of land that juts out, to the CBD was now open. And I know some people actually moved. So some people who I work with moved from Melbourne to Kangaroo Point. And the whole reason they moved to Kangaroo Point is because that new bridge was about to open. So instead of going all the way to Story Bridge and around like that, they could just walk across this particular bridge. So I thought, the bridge is open. I've not been across the bridge. So let's run across the bridge. And then I'll run across Story Bridge to get back to my route. And I thought that was a great plan until I saw the signs that Story Bridge is closed both ways to pedestrians, not to cars, to pedestrians. And that flew me for a loop. I was running a little bit back and forth, going, what do I do? Do I run back, go back to my original route? And I thought, and this sometimes happens to me, when something doesn't go my way to plan, I just change things up. So instead of doing that, I started running the other way. I started running to the south. I went to Woolloongabba down to Dutton Park. This is all areas I've never run before. And then what I did after getting to Dutton Park, there's this really big park there, Dutton Park Harmony Gardens. There's a nice little bridge across to the university. I've run across this bridge a lot. Anyway, I also walk the dogs along that path. Really nice walking areas along the river. Anywhere in Brisbane River, really. Anyway, so then I followed the Brisbane River along this very popular cyclist route. It's a Brisbane River loop. Cyclists love this loop. You see a lot of cyclists. I was passing cyclists all the time. Not that I was faster than cyclists, but going the other way, I mean. And a lot of cyclists were overtaking me. Anyway, so I just followed the Brisbane River and you go past the tennis centre, where is it? Here it is, Tennis Centre, Queensland Tennis Centre. There's a place called Chelmer. Here it is, Chelmer. Go across the bridge again to Indoor Rapilli and then into Taringa and then back along the river to the car. All up, that was 28 kilometres. So a little bit longer than my original route. So I did run 27 kilometres, 3 kilometres more than my plan. I walked the last 1.5 kilometres. So all up was actually 28.5 kilometres. So I knew that I wasn't going to have the motivation to do a long answer and reply video. However, you can all thank VB Ed because 6 days ago he wrote, "Great show as usual. Your weekend questions and answer video is always the highlight of the week." And because of this particular comment, I am going to do sort of a longer, not a longer version, sort of like a normal version instead of a shortened version of this particular video. So thank you very much, VB Ed. That was not, it shouldn't be the first. Usually, when I go through the questions, it's the oldest question to the newest question. But there is a little comment from Rick Thelian in regards to my new computer. Just to clarify, Apple Store will be replacing your purchase, which will arrive Tuesday. No, it all it needed was a restore. That's all it needed. So the computer's working fine. All it needed was a restore because I made a little mistake. When I was transferring stuff from my old computer to the new computer, I actually stopped the transfer. And for some reason, you're not supposed to do that, even though there is an option to do that, because it can cause some sort of corruption. And all they need to do to fix that is restore. Because I had nothing on the new computer, restore is fine. And it's working to perfection right now. He also mentioned lots of people seem to be upset they don't offer 27-inch anymore. I was surprised by that because the 27-inch is really good. And I was looking for the 27-inch. I was willing to forego on some other extras to get the 27-inch. And yeah, there's no 27-inch, which does surprise me. It's a nice size screen. And I suppose the 24-inch is fine. But I also admit that the quality is much better. So I was actually watching some sport on my new iMac last week. Then I watched sport last night on my old iMac. And there is a bit of a difference there. So I do prefer to watch stuff on my new iMac. But then I do have a big TV downstairs, which I watch. Although the TVs are going to stay in this house when I leave because they're on the wall. They're on the wall. Yes, when I bought this house, I bought this house in 2010, the TVs, all the TVs that were in the house stayed put. And I've been waiting for the TV, the big TV we have, to break down because it's a plasma. And I want to buy a newer, bigger flat screen TV, and it just doesn't break down, just keeps on going. So now is the time because I'm moving that I can buy a new TV, a big new TV that would be considerably cheaper than the very first flat screen TV I bought in 2008, which was quite small. Don't even know. Yeah, it was maybe 32 inches. That was over $1,000. Okay, so we're getting to a good start here. Okay, Trader Hooper made some good points, according to Dev Shaw, in regards to the issue with Pointerra, the lack of confidence that they will deliver next quarter, given what they said in January that this March quarter will be cash flow positive, and then it was a major disappointment. So it's not really the market isn't forward looking, just that the market doesn't necessarily believe what they are being told. I do agree that looks to be a good level to consider buying at the moment, particularly if they do deliver in this current quarter. I think that is a good point from Trader Hooper that a lot of management teams, they need to engender trust and faith in the vision they have. And when they do make any sort of announcement or any sort of forecast or any sort of guidance and they miss on that guidance, that is a hit, a significant hit to the shareholders' faith in that management team. So that is why I do prefer management teams who tend to be conservative in any sort of forecast, because if they tend to be conservative, they're more likely to beat those forecasts. And when management teams beat the forecast, you can consider that the market will look favorably on them. And they do look favorably on any management team that consistently beats their expectations. So I do like management who are conservative, who do know that sometimes bad things can happen that they didn't think about. And that I do think it's a problem a lot of management teams have. They just don't think about all the little things, little bad things that could happen that they haven't thought about. And that's why a lot of times we do see downgrades because of those little things. So a very good point from Trader Hooper. Okay, so here is PT. No, that's not the one. Trade Tech. A Labour win sounds like a disaster for ASX investors. Kneppy, are they not advocating for unrealised CGT in Australia? This is only for, was it only for people with above $3 million? Yeah, $3 million as PDV Fund says. So that's a good point there. I'm going to say this. I don't like this at all. I hate unrealized CGT gains. The other thing I've heard is this is not indexed. So I think someone mentioned this, if I remember correctly. Yeah, JustJamesDean says, you're forgetting new young workers did basic calculation. Even minimum wage workers starting today will eventually get caught because it's not indexed. It doesn't go up through time. if I'm saying that rightly. And Labour needs to remove Tanya Plibersek as the Minister for the Environment. She's holding up and not approving new gold mines. Okay. Anyway, so I'm not a big fan of unrealized CGT. Someone did push back on me recently in regards to it wasn't a pushback, it was more of a question. Should we be taxing income instead of wealth? It's an interesting question, but my problem with that is if you focus on wealth, then you don't you lessen the motivation for people to innovate. It's sort of like the reason why communism doesn't work is because there's no motivation to innovate. Another reason why I don't like tariffs, it also lessens innovation because what the government is doing is they're propping up those companies who are not good at what they do. And if the government doesn't prop up a company, they're more likely to innovate. They're more likely to become more efficient, innovate. And one of the reasons we saw so much progress during the Industrial Revolution is because a lot of companies needed to innovate at that point in time. So we need to bring in policies that really encourage innovation. And this sort of thing may not do that. Anyway, I'm not a big fan of unrealized CGT gains. So I think it should only be realized when you sell the asset. And my other question about this was, what about if you have a really bad year? Do you get anything back? And I think that was answered. Someone said, yeah, you do get something back, but it's just more paperwork. That's the other thing. It's more paperwork. It's more red tape, more paperwork. We need less of that. So uh, it's one of, I mean, I would say this, that Labor, many policies they have, I don't like. Many policies Labor do have, I do like. Same thing with the other government. Um, so no government is perfect, but this is one of Labor policies that I think is, yeah. Okay. Jeremy Allen. Is that from The Bear? And I'm pretty sure Jeremy Allen, what was his name? Jeremy Allen, is it Jeremy Allen White? Alan White, sorry. Yeah, Jeremy Allen White. And Allen's actually spelled with an E. Anyway, so sorry, Jeremy Allen. I'm getting confused with a famous person. A nice summary of the election. Weird that there's only a 3 to 4% difference in primary votes between the two major parties before preferences, yet so many seats change hands. It's not actually not that it's not that unusual. There's not much difference. And a good way to look at this is there's a lot of people not only in this country, all countries in the world, that will not change how they vote. They will not change from voting Labor or Liberal every single election, no matter the policies. And I'd say that's the vast majority of voters. So you do have the swing voters, and that is who the parties should be focusing on, just the swing voters. And I'd say, if you counted swing voters versus those who are going to vote either way, I think the swing voters is considerably lower. I'm trying to think of an election I'm trying to think of an election that was an absolute landslide. Now, the Russia election, and we know that the Russian elections were not fair. When was that? When was the most recent Russian election? 2024. If you have a look at the amount of votes that Putin got, and hopefully it's somewhere in here, we know this was fraud. We know there's no way he would get the amount of votes he got. It was just ridiculous, the amount of votes he got. Um, Here it is, 88.48%. Yeah, there's just no way someone is going to get 88.48% of the votes. There is absolutely no way that is going to happen. I'm trying to think of an American election where it was an absolute landslide. Most landslide American election in history. I can't think of one American election in history. Da, 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 da. Here we go, history.com. Lyndon Johnson versus Barry Goldwater, 1964. Really? Lincoln versus McClellan? Really? Reagan versus Carter? And okay, we'll go to this one, uh, which surprises me. I wouldn't have picked this one. Here we go. Let's see what the voting in this one get. Oh yeah, look at that. Look at that. Wow. Yeah, it was just a sea of blue. Oops. But I hopefully they have the amount of votes in this one. How many got elected? Popular vote. Oh no, that's the oh God, these articles are so long. Here we go. So this is a pretty big landslide. So Lyndon Johnson got 61% of the vote, and Barry Goldwater got 38.5% of the vote. And if you have a look at the most recent American elections, it's almost tied. It's almost tied. So that is, in my opinion, the norm. Very rarely you see elections like this where someone just completely overwhelms the other party. So yeah, so I think this is what we saw was fairly normal. Only 3 to 4% difference in primary votes. Yeah, that's very normal. So it's really that's just swing voters. And I would say, yeah, the swing voters were heavily leaning towards Labor this election. In fact, I did listen to a few podcasts where people who tend to vote Liberal a lot, and these were considered swing voters, but they still tended to vote Liberal, even though they would consider them their swing voters. They actually did vote Labor this election. So anyway, thank you for that, Jeremy Allen. Oh, something I've not mentioned. Warren Buffett announced his retirement. And I do think pretty soft, 94, many, many years. Who knows, with anti-aging stuff coming in, he could live to 150, 180, maybe 200. And Just James Dean says lazy. Yeah, anyway, this is interesting because so many people invested in Berkshire Hathaway just because of Warren Buffett. I'm wondering what those investors are going to do if he's just going to get out and completely get out and have no influence on what. I forget the other people who are now going. I forget who's going to be running it, but they do have some underlings. And do all these investors who invested in Berkshire Hathaway just because of Warren Buffett, what are they going to do? Very interesting. Imagine if you had a superannuation account and chipped in the 10% per annum. Anyway, so it's something I haven't really thought about, but one of the greatest investors of all time. I'm not going to say he's the greatest. I'm going to say he's based off longevity. He would be considered one of the greatest, if not the greatest. But there's always that, like, for instance, Lynch. Lynch, over the short period of time he was investing, did better than Warren Buffett. So I think Lynch just got out because he didn't like it, and I do think Warren Buffett likes it, which is why he's retiring at 94. So there have been at times better investors than Warren Buffett, but over the long term since he started investing, he's done wonderfully well. In fact, that's the sort of the what I'm aiming for. He sort of returns, and I think if you put the time and effort into doing research, learning, you definitely can get 20% per year. Just James Dean also says, my absolute pet hate waiting for sales staff in retail stores. People in this country just don't take their work seriously. Well, have you actually asked every single person in the world in this country if they take the work seriously? Now, this is in regards to Apple because I was standing around for 30 minutes. I think the problem wasn't the staff, it was they were understaffed. There wasn't enough people, wasn't enough staff for the amount of people that were in the store, and there wasn't enough staff who were qualified to help me. So that was what I was told at the time, that they had plenty of staff who were able, like, was it iPhone technicians, but they had very little iMac technicians. And at the time I was thinking, why don't you just teach everyone to be iMac technicians? So I just had to wait for that iMac technician to be available. And he did a good job. And what he did, and I'm not going to complain about this at all, and you shouldn't complain either. What he did, he helped me, and then he went help someone else as he was helping me. So he was actually helping two people at the same time. And I didn't need help at that point in time. So he was very efficient. So he helped me and then got to the point where he was just waiting for something to happen. And then he went and helped someone else. And then he came back when I had finished. And yeah, it was great. So he did a good job. And yeah, I think the major problem, I think for instance, I'm going to mention this. So me and my ex-partner went, so I actually backed into a car, accidentally backed into a car. So we had to get it fixed, insurance. And then because it wasn't her fault, she got a free rental. And we went around to, what's it called? 6T or six, what is it? 6T or 6T? 6T. Yeah, 6T. I'm pretty sure it's not called 6T. Sixth, I forget. So we went around there and there was one person there. One person, and she had to do everything. Absolutely everything in this one office. And she just mentioned, yeah, they just can't find anyone else. And I think that is a problem. And that's going to be a problem. I think a bigger problem moving forward that we're not going to have enough people for all the jobs. In history, it's been the other way around. But because of people just not having children, because of boomers retiring, and we have seen now for the first time in history, the amount of people in the United States below 18 is now dropping, and we're going to see less and less people entering the workforce. And I think there's even a chance that more and more, that a great amount of people are retiring than entering the workforce. So that is a problem. Now, that is why automation is really important. Why AI is really important. So I'm not going to blame staff just because I think at times they are understaffed, some of these stores. And to be honest with you, I don't go into stores all that often because I just don't like the experience. Oh, Sensei is asking a question. Kneppy, can you explain what is meant by if an investor says, I spend much more time looking at a company balance sheet than its income statement? Well, I don't know. You'd have to ask them. I don't do that. I'm feeling little bit dehydrated, so down goes Pepsi Max. I don't spend more time looking at a balance sheet than income statement. I look at all three. A lot of time, I used to focus more on the cash flow statement than anything else. But I do find you need to pay attention to what's happening in the balance sheet, but also the income statement. Maybe because they're more interested in debt, assets, liabilities, that sort of thing. Maybe working capital because you can see trade receivables, trade payables, inventory levels, that sort of thing on the balance sheet. A lot of times you'll hear healthy balance sheets. The definition of a healthy balance sheet, the typical definition of a healthy balance sheet is not what I would consider a healthy balance sheet, because actually that's lazy. You also hear the term lazy balance sheet. And what is defined as a lazy balance sheet is not what I would define as a lazy balance sheet. And I'm pretty sure when people say lazy balance sheet, they mean a company has a lot of cash and no debt, and they consider that to be lazy. So uh, I don't spend more time looking at a balance sheet than anything else. So I don't know why people would say that. Maybe that's why they're more interested in debt, assets, liabilities, working capital, that sort of thing. Okay. VB ad. G'day, Neppy. Thank you for sharing the stocks that you're trading. Please share the stocks you're holding in your super fund being held for the long term. I bet you have Wesfarmers. You would not win that bet. In fact, Wesfarmers is one of those companies I would want to own. So there's not a lot, but I won't. In fact, I do have watch lists up here. So here is my American holdings in my super. You're asking super, weren't you? Yep. These are my American holdings in super. So PayPal, Amazon, Google, Volkswagen, because I think it's very cheap. So going back to my value investing roots, I'm a value investor at heart. Well, maybe not at heart anymore, but I do have roots in value investing. Novo Nordisk, Nvidia, Adobe, Apple, Microsoft, TSMC, Tesla, Facebook, on all Meta, and Shopify. I think Shopify is my best performing one there, and I bought that because it looked really cheap at the time. So those are my American holdings. I haven't bought any for a while. I bought Meta. That was the last time I bought something, but I'm actively looking for the next company I want to buy and put into my American portfolio. Anyway, so I started buying companies back in 2021, and these are companies I intend to hold for the long term. PayPal was my first one. Australian holdings, let's have a look here. By the way, there was another question about this, so I'll get to that question in a second. Just someone asking what companies I do own, and this is my Australian high quality portfolio. Some of these I probably do want to get out of, like Aristocrat, AUB Group, Revel, CSL, Corporate Travel Management, Clinivel, Domino's Pizza, Fiducian, Goodman Group, Lavisa, Minres, which I probably will not consider high quality anymore. I used to consider that high quality, not anymore. Nanosonics is more of a long-term bet. Nick Scully, NextDC, Objective, Pro Medicus, um, PWI Holdings. Ooh, look at the chart for that one. Ooh. REA Group, Telix, Technology One, WiseTech Zero, Web, Aussie Broadband, Audinate, Johns Ling, Light and Wonder, Supply Network, Webjet, HMC Capital, Tours, and Bell Financial. I also have a few smaller companies in it, but these are not high quality, although some of these companies I would not consider high quality anymore. So what I tend to do with these companies is I don't really follow their goings on or that closely because I want to own these companies for the long term. That is my philosophy, my long-term philosophy. So, for instance, even though which company was it? PWI Holdings, share price is in a downtrend like that. I'd probably more I'd probably be more interested in buying shares in this company than anything else. I think the market is a little bit overreacting to maybe some bad results. And you can see before this little downtrend, the share price was in a beautiful uptrend. So I do think this company has long-term potential. Anyway, so those are some of the companies I own. And I haven't shown you the small companies I have in my super, but that is not high quality companies. And I don't have Wesfarmers. So there are a few companies I do want to own. In actual fact, Wesfarmers is one of those. So I am looking for an opportunity to buy some Wesfarmers shares. And like Berkshire Hathaway I was very close to buying Berkshire Hathaway a few years ago. Very close. I should have hit the trigger. Okay. Stewpercy says, "Oh, there's a reason I picked this one. It's just because what's happened to Ethereum over the last few days. I'm sorry, Stewpercy. I just had to do it. I'd be very hesitant with investing in Ethereum for what I've read. The adoption is not picking up like Bitcoin. I'll be honest with you, I have no interest in Ethereum. So I just want to put some Bitcoin in because I think eventually there will be maybe a few cryptos, but not a lot. And Ethereum, unfortunately, in the past week has gone bananas, up 29%. In fact, since you wrote that comment, Bitcoin has gone up, or Ethereum has gone up a lot. And it's actually interesting because I'll talk about this later. If you have a look at Ethereum just before we went nuts, there was a period of maybe 10 days, maybe even more than that, where the price of Ethereum just went sideways. Look at that. There was no volatility at all. No volatility. And that's really, that's a good, maybe not a good sign, but when you see a lack of volatility, eventually volatility is going to explode. That's why a lot of people look at Bollinger Bands because when you see a squeeze in Bollinger Bands, that is pointing to lower volatility. So if you look at Bollinger Bands on this one, you'd see a squeeze. And what that typically means, eventually there's going to be an explosion in the share in the price of the asset. And we saw that with Ethereum. It just exploded up. Now, it could have exploded downwards, but it went nuts the right way. So that was really interesting price action and volume action leading up to explosion. The other thing to look at is look at the decrease in volume over that period when it was just going sideways and there was no volatility. And then all of a sudden, when we saw it explode, massive volume came in. Anyway, sorry about that, Stu Percy. Now, does not mean that Ethereum is now a really good buy just because it had a good week. Does not mean it's a good buy. But I'm really only interested in Bitcoin. Okay, Happynow writes really long comments, and I do have two Happynow comments to talk about. Now, there's a reason I include the other comments, and you'll see that later in the video. Thank you for another wonderful wrap up again. How time flies. It's been now 6 months since I started this investing journey and catching up on your videos. So I started investing in, was it 2010 or something? So I bought a house in 2010 and I started investing almost at the same time, which sort of makes sense. So before I bought the house, my focus was on getting enough money so I can pay a deposit for a house. And then when I bought the house, I went, oh, now what do I do? And start investing. So that was in 2010. So that was actually pretty good timing if I look back on that. It's a pretty good timing. Anyway, how time flies. It's been now 6 months since I started this investing journey. Catching up on your videos input over the period, I was reflecting overnight on key wins, key losses. Positive was getting in rare earths and gold back when the world started to go to the gurgler. Negative, selling off shares too early and getting into value, EZZ. But I'm very eager to hear, Kneppy, from an astute investor like yourself, if I could be considered astute. Uh, if you're on your bad or losing decisions, do you ever review what happened and learn from those? Yes, absolutely. I think I review every single decision I make. Uh, and the problem is there is no there is not one single decision you're ever going to get 100% right. Ever, ever. Well, you can get very close. But even then, for instance, like my best decision in terms of timing probably was Drone Shield. So Drone Shield, by the way, I think Drone Shield is a nice little buy now. So I was trading Drone Shield and I just did not like how the share price was just accelerating up. I was just getting really too toppish. And on the 15th of July, I decided to sell shares, not complete sell, and my shares in Drone Shield. And then the next day, share price of Drone Shield dropped 22%. Now, I did not sell completely. So that was my mistake. I did not have confidence enough the share price would fall. I thought, yeah, it's accelerating up, but maybe I'm wrong and share price will keep going up. And maybe the company will release something really positive and that's why the share price is increasing. I don't have the confidence to completely sell out of that position. I did completely sell out not long after because that was a trend killer event, which I didn't know at the time. So every single decision I think you can review and just say, hey, could you have done anything differently? Done everything better. For instance, Drone Shield, I don't think I would have done anything differently now. In hindsight, you say, well, you could have sold off all the shares, but would I have done anything differently? Yeah, would I have done anything differently? JB Hi-Fi is another one, and I have changed the way I invest because of JB Hi-Fi, which I've owned twice and then sold prematurely. So I sold JB Hi-Fi. What was it at? It was at I forget what price it was. I just thought it was getting too expensive, maybe like $80. And what I should have done was just sold half. And that's what I've been doing now is when I do think a company is looking expensive, I'll just sell half instead of selling everything. And the whole reason I came to a decision was because I reviewed what I did with JB Hi-Fi and I realized you don't have to sell everything. You don't have to sell 100% of a stock you own. You can only sell 50. You could sell 25%. You could sell 75%. You don't have to sell everything. And that is my one mistake with JB Hi-Fi is I sold everything. My other mistake with JB Hi-Fi, I bought JB Hi-Fi way back. What year was it? 2012? No, 2013, 2012. I bought it about $8 and it was the most shorted stock on the ASX. And the reason it was most shorted stock was because everyone thought Amazon was going to destroy this company. And I had a look at JB Hi-Fi. I went into the store. I noticed this was around the time we had Dick Smith. And I went into a Dick Smith store. There was no one in there. I was the only person in there. Went to a JB Hi-Fi. It was just humming. So many people in there. The staff seemed really happy to be there. A really efficient layout. And I thought, I think the shorters might be wrong here. So I bought some shares in JB Hi-Fi and then I sold because the share price more than doubled. And I went, oh, how smart am I? I'm going to sell my shares at double the price. So I bought at 8 and sold, I think it was about $20. And the share price has increased fivefold since then. So I should have been a little bit more patient with JB Hi-Fi. Uh, yeah, so those, yeah, I review every single decision I make. And yeah, I think you can learn so much from reviewing decisions. And yeah, I think it's very important to understand why you're buying into a position, why you're selling, and have a plan. That's the most important thing. And then review what you did and if you could have done anything better. And sometimes, even if you didn't do everything 100% right, you probably say to yourself, "Nah, I think in hindsight this was a good decision, and I wouldn't have done anything differently." I looked at some of these myself. Oh, okay. Do you ever review what happened and learn from those, or do you just say it's over, it's done, and move on? Also say, no, I never do that. Also say it's very important. This should be something you do in life itself. No matter what you do, in life. If you're doing something that's important, review it. How did you do that sort of thing? So whenever I do a shift at work, that's exactly what I do. If I make a decision, I look back on it. I go, oh, could have done something differently there. I looked at some of these myself, and while I still have some time to look over, I may have been influenced by the news outlets and some charting mistakes. So the major thing is just keep on learning, and you're going to get better and better. If you just keep on learning, understand yourself, understand your strengths, your weaknesses, that sort of thing, understand your risk tolerance. So I think over time you will improve and get significantly better than you are. But just keep at it, because a lot of investors give up if they had have a bad year. They just give up. This is not for me, and they just give up. But a lot of times you're going to have a bad year, and then you follow that bad year up with a really good year or really good 2 or 3 years. So when you do have those good years, it's worth it. Oh, it's raining outside. Ben Hutchinson says, looking at short men, I'm stunned by the current level of short interest in uranium sector. 25% of Boss Energy shares are on loan. These shorters are playing with fire. Conditions, well, not literally, because if uranium goes boom, boom. Anyway, conditions are forming for a violent reversal, even at current low prices. Looks like about 1 billion needs to be brought back into the U sector to close current short bets. And of course, that could quickly double to 2 billion as short covering drives up share prices and attracts momentum longs. And we have seen a bit of a momentum in some of these uranium companies. So I do have uranium watch lists. Here it is, and it's ranked by market cap. So we have next gen energy. Let's go have a look. We have to go to current times, and we have seen a bit of a bounce. Nice bounce. I think, was it Boss Energy? Price has gone up 50%. Oh, actually, in fact, it's almost doubled. So Boss Energy share price has doubled since its lows. So we have seen a bit of a rally over the last few weeks. Whether this rally will continue remains to be seen. I'm just going to go to shortmen. Now, I'm not sure how quickly shortmen update. So this could be a little bit delayed, but Boss Energy, Paladin Energy, the most shorted stocks on the stock market. So if we go to Boss Energy, what's the most recent data we've had? Monday, 5th of May. So this is delayed by a bit. I'm wondering if the shorters have really gone down significantly in the last 5 days. And that's one of the reasons why the share price has bounced. So this is a really good thing to look at, because if you're a holder of one of these companies up here, and if the company releases something good, you're going to see a massive bounce in the share price. So MinRes, we could see a massive bounce in the share price because it's the third most shorted stock. So interesting to have a look at this list. Like Korean Energy, it's highly shorted as well. I am trading Korean Energy. One of the reasons I bought Korean was because I think it's really undervalued, really undervalued. And I saw that was pretty highly shorted, not as much as Boss Energy, but all it needs is one little bit of positive news. All it needs was oil prices go up, positive news, and you could see a significant jump in the share price of that particular company. So, yeah. So good comment from Ben Hutchinson. There was also a reply. Interesting insight, Ben. Action today, V interesting. Scott says sneaky little bull flag forming on Ebos these last few days. We'll see. Scott, I would say Scott is more technically proficient than I am, because he talks about, in another comment, he talks about Wycoff sell-offs and stuff like that, which I don't know anything about. So let's have a look at Ebos. Bull flag. Let's have a look at Ebos. See, I look at this and I don't really see, well, share price has gone here. I don't see anything of interest to me. That's a daily chart as well. So bull flag, we'll just Google this. Bull flag technicals. We'll go images. So I'd say that's the bull flag there, that consolidation period. Is that right? We'll just go sideways like a consolidation period. So I'll consider that a bull flag. I could be a little bit wrong. Yeah. So yeah, bull flag. Here we go. Bull flag. Yeah. So yeah, I don't know. I don't know. I don't know what I'm seeing there, but I'd probably have a look at the Ebos chart and not really see any bull flag. But again, maybe there is one because he does mention sneaky little, and I would just miss that because I'm not that proficient at reading charts. Ben Hutchins says, I thought FOS Lighting released a good announcement today, a small acquisition, but with a small price tag. I actually did see this announcement and I just skipped over it. Oh, Comsec's down. We can go have a look at market index. FOS Capital, fairly small company, $17 million, ooh, just really small. Chart had been looking good. I'll have a look at the chart in a second. It's this company's pretty sure this company's profitable. And where's the announcements? Here it is, acquisition of glowing structures. Now, a lot of times I will move on from an acquisition, but I will also say this. I have mentioned before that historically, and research has backed this up, that acquisitions are not beneficial to shareholders, but that is for large companies. So a larger company is, the more chance an acquisition is not going to benefit shareholders. But when it comes to small companies, and FOS Capital is a small company, there is a greater chance an acquisition is going to be beneficial to shareholders. Now, who was this commenter from? Ben also mentioned it was fairly cheap. So the company generated 1.3 million in sales, EBITDA positive. That's really good by $300,000. So nice margin, maybe not margins, but efficiency. We'll call it efficiency. That they're only generating $1 million in sales or 1.3, but yet EBITDA profitable. That's pretty good. Purchase price of $700,000. That does seem cheap, just based off that. How do they get this so cheap? It's like 2 times EBITDA. Geez, that is wow. Well, I don't know anything about this company, but just based off the multiple or EBITDA multiple, that's really cheap. So this could be a really good acquisition for FOS Capital. Let's have a look at the chart for FOS Capital. This I have been not closely following this company since they listed. I'm pretty sure they listed in 2020, late 2020. Let me have a look. Mid 2021, a little bit out there. Now, between late 2020 and early 2022, there was a massive amount of companies that listed on the ASX. A massive, it's just a glut of companies. And since then, it hasn't really done anything. But the share price did move into an uptrend in 2024. Has pulled back a little bit, but this company does look like it's not growing significantly. But here, look at the annual growth. It is growing up to $24 million in revenue. Back in 2021, $8 million. It is profitable by a small bit. I'd like to see that profitability increase. So they also have a dividend yield. So they have a dividend P ratio of 13.33. Maybe liquidity could be an issue for some investors, but interesting company. But I'm not there just yet with FOS Lighting or FOS Capital, I think it's called. Yeah, FOS Capital. JHBZ6DH says, Hi Kneppy, could you please have a look at ALC on your tomorrow's video? Well, I'm sorry, I'm a few days late. ALC is Alcidion. I always get this mixed up because it's not ACL, which is Australian Clinical Labs. And I always have to think ALC is Alcidion. They had a pretty good Appendix 4C, if I remember correctly. And I've yet to look at any of the Appendix 4Cs that were released in April. I'm getting a little bit behind when it comes to that, but my mind is on different things. I thought this was a pretty good quarter for the company, but I want to see a follow-up good quarter. So this is one good quarter in isolation. I want to see another good quarter from this company because they tend to have good quarters and then bad quarters, good quarters and bad quarters. Nice growth in receipts, but I just want to see this company really hitting that inflection point. And the reason I think that's important is because when a company hits that inflection point, they can grow organically. They don't have to go back to the market for more money to grow. They can grow organically. They can use the cash they generate to grow. And that is my favorite type of company that can grow like that. They don't have a lot of debt, a little bit of debt. Where is it? A little bit of debt, but not a lot of debt. So enough cash on hand as well. So for me, it's just, I'm going to be a little bit patient with this one. Now, I have held this company in the past. And when I still remember when I saw it, I was just so disappointed with the lack of traction the company was gaining. So I got out and I'm still waiting for that traction. But this was a promising quarter for Alcidion. Let's have a look at the chart. And the chart looks pretty good as well. Looks much better than it used to because the share price was in a really bad downtrend. It definitely has found a base and a little bit of volatility in there, but I think there's a chance we might see the share price go higher from here. Mark up $111 million. So it's a little bit expensive, but that's another reason why I want to see a bit of profitability from this company because markup is $111 million. Okay, back to questions. From Marist, who says, Hi, Epi, question on the US tariffs. Suppliers have been putting in orders last month because of the high tariffs. So this will put pressure on the supply chain. This will create lack of stock for businesses over the next 4 to 5 weeks. Do you think this could cause stocks to become bearish? Should we be putting some money away for another dip? I would never advise that sort of thing. You have to do what you think is best for you because I'll be honest with you, I have no idea. I have no idea what's going to happen. And I'd say everyone doesn't have any idea what's going to happen. Like your theory is really valid. There will be a lot of empty shelves in stores in America. That's an absolute given because of tariffs with China. I don't think a lot of people over there realize how much stuff they get from China. So we will see empty shelves, which means prices of other goods will go up. So we will probably see more than likely see an increase in inflation. So there is increased talks about stagflation over there, which is not what you want. But does that mean the stock market will be bearish? Not necessarily, but uh, I'm more bearish than I have been for many, many years. Put it that way, I'm more bearish. I do think there's a like a 50-50 chance United States goes into recession. Maybe it's even more than that. And typically in recessions, we do see the stock market drop. Now, some people might be saying, well, the stock market is rallying now, so the stock market is looking further forward than the recession, but I don't think that would be true. I think what the market is now thinking is, well, we've had a few trade deals, so we're going to see more trade deals, but we can't overlook the fact that there is a trade war between USA and China happening right now, and that is going to see United States economy suffer, and it will suffer if it's not fixed. But the other thing I should also mention is we could see a trade deal tomorrow between China and the United States. And I think if that happens tomorrow, the stock market, the American market, will go bonkers for a short period of time. So, yeah, so the answer to this is we just don't know. No one knows. Um, if I'm a little bit more bearish, I do have a little bit more cash on hand. So I do have more cash on hand right now, just in case. So it's all about probabilities. It's also all about protecting my capital. And you don't want to be 100% invested if we go into a full bear market. That is not the way to invest, in my opinion. So the way I invest is if I'm more bearish, I have more cash on hand. If I'm really bullish, wouldn't say I'm 100% invested, but I always have cash on hand. There was actually a really good video, really good video. I can't remember who did it. A really good video says that those investors, this includes fund managers, those investors and fund managers who always have cash on hand ultimately always outperform those who don't. And there was really good reasoning in this video. So I might do a reaction on that video because it was really good because I tend to always have a bit of cash on hand. But that cash on hand always varies depending on how bearish or bullish I am. And right now I am more bearish. I just don't know which way the market's going to go. That's why I'm bearish. I just don't know which way the market's going to go because ultimately I am bullish. I am bullish because over time the stock market goes up. But at this point in time, we just don't know. No one knows. So ultimately, the answer to your question is I just don't know. JustJamesDean says Austal hired a school kid to do their Macquarie conference presentation. Okay, I didn't. I'll be honest with you. I did not have a close look at any of these presentations. So let's have a look. Austal presentation. Okay, it's a nice picture of a house. Okay. I could sort of see why, like a primary kid, particularly like a boy who's fascinated with ships, could have really got some joy out of doing that slide. Yeah, in that slide. Yeah, it's not the best presentation. And I think there's a chance that a primary school kid probably could have done better than this. Yeah, I don't think they put much time in this. I don't think they put much time. Or maybe the intern was told to do a presentation or, create a presentation, and they had no standards. It was like, just do whatever you want to do. Yeah, anyway, so I do like pretty presentations, and that does not fit that criteria. Austal. How I'm saying that, look at the chart for Austal, and they probably don't care. They don't probably care about the quality of their presentation because look at that chart. What a brilliant chart. I wish I got into this one. Oh, yeah, there's you, Med. Care to share your portfolio? So I've already shared my high quality stocks, and that's all I'm going to share in this video today because I want to keep this run a little bit shorter. So thank you very much for that question. In fact, I was going to do what I showed earlier. Uh, um, whoever asked me that? Sensei says, am I going to have a home gym? No. Oh, well, I might have a home gym in the garage, but no room for a home gym. I do have all the gym equipment, so I might as well use it. And I do have four bedrooms, so the main bedroom, and I'm going to turn one of the bedrooms into a study and one of the other bedrooms into a media room for myself, and then just have one spare bedroom. I don't need three bedrooms. Anyway, so if anyone wants to stay with me, you can have one bedroom, and I've put the master bedroom at the back and the other bedroom right at the front, so we are separated. And that was planned like that. And Scott says I should start playing the banjo. I am not that little kid. No, it wasn't a little kid. Was it the little kid who played the banjo in Deliverance? That weird looking kid, banjo. Yeah, yeah, okay, yeah, yeah. So you're saying I look like this weird little kid? If you've never watched Banjo or never watched Deliverance, oh, that's what he's like now. Yes, I would recommend it. A good movie. Well, I wouldn't say, yeah, it's a good movie, good nice. I wouldn't say nice. What's the best way to describe Deliverance? Well, it's in the name, Deliverance and Hillbillies, and yeah, well, you get the picture. Okay, if you've never seen it. Ben Hutchison, some persistent buying of Cyclopharm began midway through today, ended up 14%. Let's see if a positive announcement drops in the next few days. Haven't looked at Cyclopharm for a few weeks. Let's have a look at this chart. Oh, yeah, it's dropped a lot. Got up to 250, dropped all the way back down to $2. No, $1. And then we've seen it bounce. So up a lot on Thursday, 14.96%, and then down 7.53% on the Friday. Did the company receive a price query? Let's have a look. I reckon they should, but they didn't. And they haven't released any price sensitive announcements since the 1st of April. So over a month, Tech Negus, US momentum accelerates. Interesting to see the share price collapse like this. I was actually looking at this, keen on this one, at this little period here when the share price looked like it was taking off. And then for some reason it collapsed. I'm not sure what happened, but it did. Looks like its share price collapsed on results, 25th of February, down 20%. Does that confirm? 25th of February. Yep, see results. CYC results summary, preliminary final report. And yeah, let's see if a positive announcement does drop. That would be a little bit too coincidental. And I think there should be an investigation if that does happen, but there won't be. Rick Thelian says, Michael, quite a few American movies are made in Queensland and New South Wales due to state government incentives. That's absolutely true. But I also mentioned that a lot of states in the United States have incentives as well. I have no problems with incentives for movies to be made like that. But I would prefer Australian movie industry to create better movies. I'd love the Australian movie industry to create really good movies, sort of like the Koreans are doing. Koreans are creating great movies, great TV shows. Why can't we? Why can't we make the next show? What was that? Parasite or whatever. All the good movies don't have to be made in. United States and England and Korea. Down Under is brilliant. What's Down Under? I mean the song. Scott says, thanks for covering Sigma Healthcare and a fair stock suggestion for the watch list. It's an issue. Oh, this is the technical. And when I read this, I went, oh, Scott knows way more about technical analysis than I do. It's an interesting chart between Sigma and Ebos. Both are good companies, similar industry, even similar chart patterns too, but with a subtle and significant difference. I think one chart suggests distribution while the other suggests accumulation. So distribution means selling at the top, and accumulation means buying at the bottom. I believe that's the definition. So if you look at what was it? It was Sigma. So share price of this one has rallied a lot, and now we're starting to see go sideways. So I sort of can see that. While EBOS, and I've already looked at this one, sort of I don't know. It did drop a lot many years ago. It's just been going sideways ever since then. So maybe. Anyway, I think both are going sideways on a risk reward basis alone. I own the accumulation pattern and I'm keenly looking to buy more, having long since sold the former stock into its distribution demand. See the four stages of the Wycoff distribution if you're keen. And now just waiting for example, a trading update. Oh, that's very good. So what you're waiting here, you're saying I'm just waiting for that announcement, that trading update, that positive trading update for the share price to explode up. I understand exactly what I'm talking about here. And the whole reason I came to realization that there's something to technical analysis was back in the M2 communications. No longer on the ASX. They were bought out by, who were they bought out by? Was it Vocus? And I had been reading a lot of technical books because that's just who I am. I'm quite curious, open-minded, curious. And I was reading all these technical analysis books, understanding charts, how to read charts. And I noticed the M2 communication share price was just going sideways. Just going sideways. There's no action, no volatility. P ratio was like 12. I just couldn't understand what was happening, why the markets and all the other, what do you call it? Telecommunication companies at that point in time had a much higher P ratios, blah, blah, blah. So I just couldn't understand it. And then one day, the share price popped up out of a long-term consolidation period. Share price popped up on higher volume, and that was the start of a massive bull run for M2 Communications. And that is when the light bulb just lit up like a blaze for me. That was the point when I saw that happen. So I can sort of understand what you're talking about here. All it needs for EBOS is a good positive update and the share price will take off. And now just waiting for, yeah, exactly right. So Wyckoff distribution, four stages of the Wyckoff. Let's Google this. Accumulation, markup, distribution, and markdown. So I actually do understand some of this, I suppose. Yeah. So even though I don't know what to call it, yeah, accumulation, markup, distribution. I didn't know that was called markup and that was called markdown, but I sort of understand accumulation and distribution. That sort of makes sense to me. But I don't know, yeah, all the rest of it. You know. Oh, here's another one. I like this one. Markup, distribution, what markup? So I think this does happen a lot too. So you see the share price going on a run and then going sideways and go on another run. So even though that looks like distribution and you expect the share price to go down, the share price instead goes up. So I think that does happen. And I think that also happens in the opposite way as well. But I also believe that technical analysis is not 100% absolutely reliable. There is, what's the word? There are subtleties to it that make it not 100% effective, always effective. But overall, based on percentage, it can be, I think if you do know how to use it, it can be very beneficial. JustJamesDean says Australia's already covered by Chemist Warehouse. Even rural towns, where else is going to grow? International expansion countries don't seem appealing. Interesting enough, I was reading a Livewire. I think it was Livewire. Livewire. I have to really get back into my mind. Are these 13 high quality stocks the perfect ASX portfolio? Oh, this would be a brilliant reaction video. I'm trying to remember what. Was it this one? No, it was this one. It was this one. Okay, thank you. So thank you. I'm not making stuff up. So your comment, Australia's already covered by Chemist Warehouse, even in rural towns. Where else is it going to grow? That reminded me of this particular article. What was it called again? It was called in Livewire. It was called Buy, hold, sell. Five Aussie companies ahead of the competition and two big buys. And one of them gave as their stock pick Sigma Healthcare. And this is what they said in regards to Sigma Healthcare has one of the strongest moats on the ASX. And they also mentioned the rollout is still quite nascent. I actually did have to Google nascent, by the way. I was like, what does nascent mean? It doesn't mean early stages. So I thought it meant early stages and just coming into existence and beginning to display signs of future potential. So this particular person, Will Granger, says the Chemist Warehouse rollout is still quite young. They still have a lot more to go, both internationally, he says, and even within Australia, which actually did surprise me. So it's a strong buy for us. They are expanding overseas, or they're trying to. Doesn't mean they're going to be successful, but I still think Chemist Warehouse can grow a fair bit from where they are now. But if they do grow significantly overseas, that could be company changing for that company. But problem I have with Chemist Warehouse is I just don't know the valuation. I just don't know. I can't tell you right now. Oh, Just James Dean also said, can we please run through interesting the Mac conference presentations in Saturday's show? So I'm sorry, I can't do that today. And the simple reason is I haven't gone through any of the presentations yet at all. I'll probably do that over the next few days. And maybe if I remember, I can do this at a later time. The other thing I noticed is there's a heart next to you. So apparently you received one of the highest number of hearts from me. Congratulations. That's because you write so many comments. And here's another comment from Happynow, a very long one. A very different and informative take as always. Thank you. Can't speak for all this world, but as mentioned a few times in a short time, I stumbled onto your channel. I'm 7 months investor, trading noob, and regardless of anything else, whether successful or non-successful, information or decisions I've made along the way, you have always given the time that you can spare in responding and looking at comments and helping your community in learning and growing. I even know in my short time, I feel I've learned 10,000 fold in my mentality and knowledge just by being here, day in, day out, when you do your thing, sharing you. Sure, you don't read my comments as much as you used to. This is the only reason I'm reading this comment because you just said that. So if you ever want me to read one of your comments, just write that. I'm terrible. As they are too long nowadays. Yeah, this is really long, and you don't have the time anymore. I'm kidding, but you get my drift. Hopefully, I mean it wholeheartedly. You have been a breath of fresh air and have made a big difference in how I look at things and interact in the market. Oh, while I'm here, I'd like to blame you for the dog value stock of EZZ. I just had to, but seriously, you really have helped me and many on here in our respective journeys, and your humor goes a long way in that also. Thank you again. Now, EZZ. So it's really interesting because so it all depends with companies like this when you bought and when you sold. So I bought EZZ. Oh, geez, I don't know, remember when I bought. It would have been 2000. It would have been maybe 40 cents back in 2023. And I held, and I was like, and then the share price went on a massive run, and I did take profits. So this is another case where I did take profits near the top, but I did not sell completely because I wasn't confident. The share price just went bananas, and it was very similar than Drone Shield. Now, I have not sold out the rest of my holding in this company, unlike Drone Shield, and the share price just keeps on dropping. I didn't like the most recent update, and at this point in time, the share price is in a downtrend. So this is a case where I will be looking for any sort of shift in sentiment and a trend in share price because I do believe, even though I did not like the last update, I do think there is some value to this one. So market cap is only 72 million. They have how much cash they have on hand? This company has, I'm assuming the company now has $21 million of cash on hand. And they're still cash flow positive, still profitable. Let's have a look. Cash on hand. So operating cash flow positive, 1.5 million. Even though I was disappointed in this quarter, I expected a little bit more. Look, they pulled back on advertising and marketing, and they have, yeah, $21 million of cash on hand. So this company has what is it? It has an enterprise value of 52 million for a company that is growing, maybe not as great as I wanted them to. They're profitable and also dividend paying. So I do think there's definitely an argument that EZZ is still really good value at these levels, but I really hoped the most recent quarterly was much better than it was. But maybe it's found a bit of a base just because of valuation. Okay, Trader Hooper echoes my thoughts on Avita Medical. I thought Avita Medical results look pretty good. So on first look, I thought so too. The near-term cash positive flow positive and profitability comments were particularly appealing. However, a quick peek at the hot copper threads indicated that they missed guidance. Yeah, I did not look at hot copper. I think I ChatGPT'd it, if I remember correctly. Did I ChatGPT that one? Yeah, I did. That's right. Yeah, and they mentioned that also. So this is actually a really good look at why ChatGPT can be quite useful, and even hot copper can be quite useful because sometimes I'm a bit clueless on something. I go to hot copper, and you have to look through all the dreg there or the crap there, but sometimes you do get some good insight on a company. What I typically find is those companies that there's a lot of what do you call it? There's a lot of threads on, a lot of posts on. Those companies I tend to ignore, but those companies where you don't see much action, maybe a few comments a day, maybe when a company releases an announcement, maybe they get 10 comments, that sort of thing. Those are way more useful. So I tend to focus on those companies, and Avita Medical might be one of those. Anyway, so they mentioned in the Avita Medical hot copper thread that they missed guidance, so the share price drop wasn't a surprise. It really does demonstrate that apart from the results, it is important to know how they compare to expectations. Yes, that's the absolute thing. So a lot of times when I do see results, most of the time I don't know the expectations. And I love some sort of website where we have all the expectations of a company before they go into results, because that is the most important thing, how the results compare to expectations. The other important thing is any sort of future guidance. So the two main driving forces of a share price when a company releases results is how they compare to expectations and also future guidance. So good comment from Trader Hooper. Oh, and finally, Just James Dean says, I don't have friends, so I freely give stock tips to anyone left, right, and center. Yeah, I don't have friends at all. I don't need friends. I'm that sort of person. And I will give stock tips to the bum on the street, the homeless person on the street, because instead of giving them cash, and hopefully they could take the cash they do have, get from other people, and turn that into $1 million with my amazing stock tips. But anyway, a bit of comedy to end this particular video from Just James Dean, who doesn't have any friends, and it's not a bad thing. Some say you need friends, you need to be that sort of thing, but some people don't need friends. We just don't need them. Anyway, that's all I have for today's video. If you have any questions, any thoughts, leave those in the comment section of this video. Otherwise, I'm not a financial advisor. If you need financial advice, make sure you seek out someone who is qualified and can speak to your own financial needs. That's it for this video. Have a good day. Bye.